Good morning, traders. Today is the 1st of June, 2021. My name is Neville Hornsey, market analyst with YouTrading. And today I am joined by
Joel Frank, also market analyst with YouTrading.
How are you doing, Joel?
Yeah, mate, I'm all right. Enjoying life. The weather has changed. Yeah. I mean, we're going to be the classic Brits, always talking about the weather. But you just can't not. It's so good at the moment.
No, exactly. And putting on the factor 30 yesterday, that was a treat. So
yeah, very good.
But I guess generally yesterday was a quiet day in the markets. So
it was.
Going down the beach was the key, really.
Exactly. Well, I mean, UK, US markets shut anyway, so not really much happened. But I kept an eye on the news, and it was a bit like, what happened? We had Chinese data that was a bit just didn't really matter that much, did it?
No. Euro kind of benefited from a weakening dollar, but I don't know if that was more the euro or more the dollar, really. So.
Yeah, it's probably not worth looking too much into those Monday flows, to be honest, because it's like thin conditions, isn't it? So when the US guys return in the coming hours, that'll be when we get to see how they're thinking for the week, I think.
No, definitely.
Yeah.
So we had RBA rate statement over the Asia Pac session. What do you think about that? Anything?
I mean, I thought it was pretty boring, to be honest. As in, very much as expected. Although I think there was that initial slight weakening in AUD because I think some people were expecting a slightly more hawkish tone from the bank, and they were a little bit more dovish. I think they were as expected. They stuck to their guidance, which is pretty much like no rate hikes into 2024. Which is what they've been saying for ages, really. But then they were also citing some risk to the near-term outlook because of the potential risk of another outbreak of coronavirus in Australia, which is fair enough. I think some people took it as a bit dovish. But to be honest, as a driver for the Aussie at the moment, the RBA isn't really a big thing right now because they're unlikely to shift their policy stance massively.
No.
That's my opinion.
And I can't see how they're going to shift policy whilst China and Australia are kind of not at loggerheads, but then they're definitely not talking nicely to each other. So
that's a good point, actually, mate.
I don't see how that central bank could go turn off the easing until they knew that they could continue exporting to China. But because the news, I just keep watching the news coming out of Australia, as in just the general news. And they're very against China at the moment, so it's quite interesting.
They are. I mean, we just have to see how that affects the economy over the next couple of years, and then the RBA will just respond to whatever happens with the economy, I guess. So, but it's still going to be a while before the RBA starts hiking rates. To be honest, they're going to be probably close to the back of the pack in the G10 in terms of the race to start tightening.
Yeah, like you said this morning, it did come off this trend line that I put on earlier in the week, and again at the London session, they tried to push through that trend line and then rejected it. So I don't know about you, but on a smaller time frame, I can see this as some sort of distribution pattern where they try to go up higher. So I guess if we test the 0.765, we could be a lot lower in the near future because generally we're in this range for most of the year now. So
that's true.
Yeah, so if we get below the Ichimoku cloud or any of these sort of swing lows, we could be another 500 pips lower. So
could be. I mean, that would obviously require a compliant US dollar. And the dollar has been weakening. And if it does continue to weaken, then I think Aussie's probably more likely to just stay supported within that range. But if it does start picking up, then Aussie's in trouble, definitely.
Yeah, definitely. Yeah, it's going on the dollar. It just refuses. I mean, that's why I sort of mentioned the Australian dollar coming off, because if anything, that's a bit more commodity focus. So if commodities are to come off their highs as well, but this dollar just refuses to go down. I know it's under the $90 sort of level now, but it's just been trading like all the way through like the middle of May on that line. So
that's crazy, isn't it? There's so much indecision. Like even when you look at positioning and stuff, people, or not so much like asset managers, but leveraged funds who are basically like your hedge funds and your people that are like trading. If you look at the positioning data, they're like really undecided with regards to the dollar. So I think that's just, I think people just aren't sure. Is it going to go lower? Is it going to go back higher?
I think today's ISM manufacturing PMI, because that's expected to come out slightly better than last month, but I reckon we might actually see like a drop in that. I think prices paid and all those type of things are not conducive to having people unemployed as much as they are, and these continuing job losses and things. I don't think it's going to be boding very well for the economy. I think, and I think if there's a downturn in the ISM manufacturing stuff, then that hope of continuing reflation trade might come off.
Because now you'd be talking more about like a stagflation type environment.
Exactly. Yeah. And if the dollar refuses to go down, then it could go sideways like it has done for the last 3 weeks, or it could actually start creeping back up. So,
I mean, it's going to be like you're saying, like it's going to be a big week for the dollar because we got ISM manufacturing today, we've got ISM services on Thursday, and then NFP on Friday, and all of this data. Well, I think obviously NFP is the most important because that NFP last month was really bad. So we're looking to see if that was that temporary or is that the beginning of like a trend. So that's going to be crucial. But like I say, if this data comes in weak, it's not going to be good for the dollar because it's just going to reinforce that Fed dovishness, I think.
Yeah, definitely. I think, with CPI not like, being under 2%, that's obviously the inflation Easter's sort of main worry. But I don't know if these prices are going to get accepted, because if people aren't earning as much money, if people aren't, guaranteed jobs, like consumer confidence isn't high, then prices will have to come down. And I think that's why we're sort of seeing some commodities come off their highs as well. I just got a feeling that March was kind of peak inflation, peak reflation trade. And now, this worry of stagflation and deflation is going to start creeping in. Yeah.
I mean, like you say, it's a risk. And do you think that would be a dollar negative?
Well, just based on what happened over the last year, probably no. I think that's probably a dollar positive. I think.
Oh, okay.
Because if the US is like failing, the rest of the world's going to be failing more probably.
Okay. And what do you think the safe haven bid the dollar?
As in like what happened like last summer, up till when was it? So that was March 2021. And this was, where's March 2020?
All the way back.
All the way back.
All the way back to the left, that big undulation.
That's it.
That was the COVID pandemic.
There you go, yeah. So, I think this obviously not up to those prices, but definitely up to the top of, March 2021. But we'll see.
Fair enough. That's a good point. Maybe something this is another reason. Like even we are a little bit divided on what potentially the implications of like a more stagflationary environment is for the dollar. Yeah, that's the struggle at the moment.
What else is out today? Oh, Canadian employment change, and that'll be Friday. So, any news from Canada that you sort of picked up on?
What the main things going on for Canada? I mean, obviously, so the Canadian, Canada's been in like lockdown, like quite strict lockdowns and stuff. I think they're being eased a bit now, but definitely earlier on this month it was strict. Last month was strict. So last month saw job losses. This month is expected to be more job losses. But that shouldn't. I don't think that should like materially dent CAD because. Obviously, it's expected, isn't it? And the vaccination rollout in Canada has been going well. So I think the expectation of a good economic rebound this summer is pretty high. So as you can see, this is dollar CAD, isn't it?
Yeah, so this is dollar CAD, yeah.
As you can see, it's like probing like multi-year lows. Like you have to go back. When we're our lowest since what, 2014. Wow.
Yeah, so it's 2017, 2015, 2014, yeah.
Yeah, and it's like that 2014 low, or what was the date of that low there?
That's the 2015 low here.
2015 low, yeah. My bad. I guess that is the target for the dollar CAD bears. And if oil continues to perform well, as long as the expectations for this Canadian recovery driven by the vaccines remains in place, well, then it's potentially there for the taking. I guess that'd be a move under 120.
But I think
the only thing is,
go
on.
If it gets under 120, then there's not a lot of structure until down to 112. So it's I think if we do get under there, and like you say, oil does get out of this trading range, because we could be another 10. I wrote today, we could be another $10 higher if this range, expands to the next level. We could be at $77, in a couple of months' time. So that would I think that would definitely push the Canadian dollar higher and the dollar down. So
But the only thing with the CAD, my only worry is just the fact that it has come a long way in a short time, and it might be due a bit of profit taking related pullback. So it might be worth waiting for that pullback to get in on some more favorable levels, and then wait for the next big push lower.
So this is if I said about the dollar going higher. If there is a problem in the employment market in the US and people aren't confident and they want to spend their money elsewhere rather than on higher prices, like higher oil, then there's this level from 2015 becomes major support. And then like you said, if it does go higher, then that's when I think the Dixie goes higher, and maybe the euro comes down. There's a lot of shoes that need to sort of fall into place, aren't they, really?
There's a lot of spinning plates. There's always a million.
But if the dollar just collapses and the Canadian dollar goes a lot higher, then it is a big fall, because it's the same for the USD versus the yuan as well. It's at that point where it could find support here from 2018.
Yeah.
That's a similar sort of pattern to what we landed into with the Dixie before we went back up to the balance area before. So,
this was a piece of news that's probably worth talking about whilst we're on dollar yuan. And obviously yuan is China is the second biggest economy in the world, second most important economy in the world. So what happens with the yuan is it's the second most important currency, isn't it?
Yeah.
The PBOC, what did they do? They basically upped the reserve ratio requirement for something to do with Forex, which basically means it's more costly to go long the yuan.
Yeah, it's appreciating too much, and they're worried about it.
Exactly. They want to slow the pace of appreciation. So that kind of, for me, that makes that support around 625. That's going to be even stronger now, because obviously the PBOC seemingly don't want it to even get there.
But then, we've had the dollar Swissy, the SMB, back in the day, couldn't hold the peg any longer and things like that. I think when central banks try really hard to, change the course of their currency, the market generally pushes them. So the yuan could be pushed to the limit. I guess it depends on how much the PBOC actually really, really want to get involved. But their actions are supposed to devalue the yuan a little bit more.
Yeah, it's mostly jawboning at the moment, and then taking these little actions which
well, they need to export.
Don't matter too much.
They don't want the Chinese products to get too expensive.
But they're also, one of the counter arguments is they're worried about commodity price inflation, and a stronger yuan dampens that. But then, like you say, if you have a stronger yuan, then it's more costly, or it's worse for the exporters. So it's like a balancing act for them, definitely.
But I guess I think we're getting to that stage where the dollar index, the USD versus yuan, and things like the dollar CAD, because that's commodity based as well. It's kind of at that sort of inflection point now, and the views that I had on the Aussie dollar sort of reflect that. It's had a good run up. We'll see. What else? I guess oil. Yeah, we should talk about oil because
go back to oil.
There's a big meeting going on. OPEC,
yes.
JMMC meetings discussing how they're going to hopefully cut for June, but not necessarily cut the production flows in July. They're still not convinced about the.
No, they're expanding output.
I know it's the opposite of cuts. Yeah, reducing cuts. Yeah,
reducing cuts. Yeah, that's it. Yeah, I was like, they cut output. No, they're not. No, yeah, I see what you mean. Yeah. I mean, it's literally. I think the thing is they're going to go ahead cautiously with their plans that they set out back in April, which is to steadily be raising output or reducing their prior cuts. But they need to be patient, really, like you say, because Iran, don't really know what's going to happen there, but it looks like a lot of Iranian supply is going to be coming back. And there's also still uncertainty about the demand situation in some of these Asian economies, like particularly India, but also some of the other Eastern Asian ones. So, yeah, just cautious. But the thing is, the underlying picture is that Europe is on fire in terms of oil demand. North America's on fire. And as soon as Asia gets its this outbreak under control, they're going to be coming back strong as well. So, yeah, I
mean, the chart definitely looks bullish for oil. Yeah, there's no way you can say, I mean, apart from we're approaching, if we were to go another level higher, like up to 77, 78, then we'll be approaching, previous resistance from 2018. But it looks like higher prices essentially. Momentum's rising, price action's rising. Everything's on the up.
Yeah, I guess the next target being that. When is that? The 2018 high? Yeah.
So September 2018, and then after that, so after this particular one, there's a real gap in price action. So I don't think we go to 95 in the next month, but just
my God,
it's just because that would. I keep thinking all of the statements from the central banks are saying inflationary pressures, supply chain disruptions. A lot of it is to do with the price of energy, like oil. So if this inflation is supposed to be transitory, having higher prices in oil isn't going to help. So,
very true. And especially like you say, if we did get all the way back up to the 90s or even 100, my God,
no,
that would not be good for inflation.
No, but I heard years and years ago that a lot of traders would short above 80 and go long underneath $80. $80 was kind of the sweet spot back, say 10, 15 years ago. Obviously we had that big spike up to.
Yeah. I mean, that used to be kind of the trading range back in the day. If you zoom out a little bit more, it was
it's the contract don't go further.
Oh, okay. Yeah. Fair enough. But back around the time of the global financial crisis and even the years after, it was oil was, I don't know what the all-time high is. Is it 150?
I'd have to go on another chart, but
it's something. It's something pretty high. Yeah, I don't know. I mean, it's so crazy even thinking about that when we're at 68. Yeah. So let's just see what happens in the short run.
But we're kind of getting to a point where, we could find some resistance, $10 higher. But if we don't find resistance there, then the sky is the limit, literally.
Yeah.
Okay, so we've talked about Europe, euro dollars kind of at resistance for as far as I can see. Pound dollar, the same. It's not, it's going up, but it's not going up with any real momentum.
Yeah.
Dollar yen. For me, I had it on a pullback, ready for a continuation higher. But that's kind of where I'm at with the charts. Anything else you want to look at?
I think we've been through all the main events of the week, the incoming week, haven't we? It's mainly about US data, really.
Yeah.
I guess a few other things we haven't really spoken about is just we've got some central bank speakers. I think we've got Bank of England Governor Bailey speaking. Is that today or was that tomorrow?
Today.
I can't remember. That's today, 4 p.m. Right. Okay. We've got Powell speaking later in the week, and I think we had Lagarde as well.
Lagarde, they're both.
I mean, she's always on the wires, though.
No, but those two are talking at the Green Swan Conference.
Oh God, okay.
Which has been, I think, speaking, Powell's like talking at a what's it called, Bank of International Settlements panel on the Green Swan conference. So to do a coordinating finance on the climate. So yeah, they're kind of looking to distract us all from their failing policies and looking to go green and
they're virtue signaling with all this green stuff. Yeah. It's just a big virtue signaling exercise. There's nothing they can actually do to be green.
They're also going to talk about in the future, like this, the G7 are going to be talking about carbon taxes and corporate taxes across the globe. So they're going to try and homogenize that. And obviously the central bank digital currencies acting as some sort of backstop to the next crisis. So which we'll see.
Potentially. But I mean, other than that, like central bank speakers and the G7, like you say, I think that's pretty much it for the week. Main thing, definitely US data. That's going to set the macro tone.
Yeah. So do you want to do a guess on the NFP number and see if we get anywhere close?
My guess, 600K.
Oh, really? Are you getting big again? All right.
What are you going?
I'll go under that. I'll go 500. Yeah.
500. Yeah. How do you think the market would react to your guess? How do you think dollar would react?
Well, in all honesty, NFP for me, like recently, has been up, down, and back to where it started. so I think
it does actually do that. Yeah.
On the day, I think we end up flat.
Probably.
Overall, I think that if the employment data is not going in the right direction, and they're still waiting for this PCE, I think it's so hard, isn't it? Generally, I think the dollar's going to go up. So we'll see. Yeah,
fair enough.
Yeah.
We shall see.
What do you think if it was 600 or above? Like, what do you reckon the dollar would do?
Oh, I think 600 is kind of probably close to consensus, so maybe it wouldn't be that much of a reaction. I mean, imagine if it's 1 million or above 1 million. What do I think it would do? Oh, that's a tough one. I mean, potentially you could see the dollar strengthen on, just economic optimism type things, or the optimism that, the Fed's timeline to tapering is back on track. Like the Fed's going to turn a bit more hawkish now. That should support the dollar.
That's it.
Maybe above 1 million, that would be a dollar positive.
Yeah, because that's the thing. Like the market seems to flip-flop between inflation's going to be running out of control to there's not going to be, the Fed really are not going to raise interest rates. So it's more about the sentiment of the market, like on whether they think the rates are actually going to go up or not.
Yeah.
So we shall see. All right,
we shall see.
Good talking with you, and I'll catch up with you next week.
Yeah, see you then, mate. Have a good one.
Cool. All right, take care.
Bye.